All right, good peoples. It is Sunday evening, and I've been working on this for a while, so sorry it's a little late. But this is your once a month, where we get in here and we talk about what the pay is going to be. But before I do that, let me go over some reality here. Well, here's the reality, right? These dates, and you can go straight to the YieldMax site and see them. So they don't vary a lot. They're always, I call them the first week, but sometimes by the time we actually get paid. So there was a change that these dates are now the same date, the X date and the record date. You see the little asterisk. So there was an SEC rule about how long it takes to count whether you own something or don't. So we don't need to get into that, but just know that you always have a declaration date. So they're going to declare 2 hours, 3 hours before the market opens, so you can always choose to buy. And many people do. They chase yield, right? They go, hey, oh, Nvidia's going to pay this, or Misty's going to pay that, or Coney, or PayPal, and they jump around. And you certainly can do that. I don't think it's always the smartest situation. But anyway, so 7-3. The X date is 7-5. Why 7-5? Normally it's the next day because July 4th, good people, Independence Day, right? And then we'll be paid after the weekend because the 5th falls on a Friday, right? So you get paid on the 8th. And so anytime you want to know, just go out to YieldMax and you can look at their data out there. Okay. So let's jump into this. Let me make sure I've got my screen blown up the way I want. Okay. So what we have is, I'll do them in order that they're listed typically on the website. So let's talk about Tesla. First of all, I bought Tesla for the first time. I looked at the chart before and I saw that YieldMax haters that bought Tesla and so forth, and I was like, well, not that anyone's perfect, and I can't tell you tops and bottoms, but I can give you probabilities. And, it went up 20x. I always say that from 2019 to 2021. So once it started to come down and it broke some of its moving averages, there was a high probability it was a wave down. And sure enough, that's what you saw. I now see it. It hasn't completely confirmed, but it's turned and moving up. While I wanted to experiment with Tesla and crash, I actually just bought Tesla because I'm bullish on this. It doesn't mean that something doesn't happen and it doesn't turn south and go down and revisit 100, but I don't tend to think it's going to do that. But if I see a pattern developing that it turns down and breaks support, then I may get out and wait for that. But I'm bullish into the 400, 700 thousands for Tesla over time in an up wave. Again, they have to deliver, right? They follow the S-curve and the new economy model. They have to continue with their robotics internally and all the manufacturing, their supercomputer. I mean, basically, it becomes a supercomputer on wheel. You have FSD, full self-driving, so I won't belabor that. But the point is, I think it has a very bright future. It has to execute. And this thing could be, 20x again. But it has to execute, and we have to see it. So the haters, I hate to see somebody buy it high, have it go down, and blame YieldMax or blame Tesla, right? It's just the natures of Fibonacci and cycles and other things. All right, let's jump into ARK. So anyway, I have Tesla paying 84 cents, right? I think that they could pay $1, but they probably won't, right? It had a good month. It's turned the corner, So I'm happy. I bought in, the mid-15s. And would I even panic if it went back to the mid-15s? No, it's more of a long-term direction. So ARK, 32 cents. Again, I think Kathy Wood is brilliant, but oftentimes she's early. and she picks these technologies and things that haven't really panned out yet, but will in the future. So ARK, look at that. It's 1079. Will it reverse split? I don't think so. I got a video coming out on reverse splits and YieldMax and just, because I get a million questions around that all the time, especially new people. Let's get into Aptly. So how's Aptly going to do? And I'm going to save you because I give you enough commentary on how much gain we had, right? That's another indication. How did the NAV behave that month? But again, YieldMax doesn't, if they paid on that, I'd be all over it. If I saw one clear formula, I'd report on it, I got the total payouts collected. I got an average of what they paid out. I got a median, right? I could go into mode, or I could do some other scientific calculation on the number. And certainly averages and things like that pan out when you have the kind of months that Tesla and ARK do, because they got 17, 18 payments. But it doesn't mean a lot how they do in that particular month. So let's jump to Aptly. I got 43 cents. Last month they paid 40. So I had them going up, I had ARK going down, and I got Tesla going up, right? Because I see the trending underlines happening. Nvidia's a tough one. I mean, you talk about the number one, that is the stock market right now, right? I'm very cautious about Nvidia. I get requests every day. I'll probably cover it just because I get tired of being asked all the time, right? But, to me, it's closer to a top than a bottom. It might have a 3x in it or a 4x over the next 10 years. But I think it's had its day. And look, I was in hardware and software. I was in tech for 40 years. I saw a lot of innovation. Hardware leads. Hardware is delivering what's needed in AI. And Nvidia owns that space, right? But there are competitors, and they're big competitors, and their margins eventually will suffer, and they won't be able to. But short term, they're the dynamo. They're the GOAT in a lot of ways. So I got Nvidia at 248. Again, YieldMax can make their decision. They had a great month. But again, they're going to run by their weeklies at times, right? And sometimes you're better to own the underlying, but it wouldn't surprise. You talk about volatility. Think of it this way, people. Everybody gets on a boat. What happens when there's a whale out there and everybody runs one side of the boat and it kind of tips, right? Well, that's the definition of volatility. If something happens, they all run to the other side. Well, just watch the moving averages on Nvidia. That stock in the 120s, that's the 20-day moving average. Back in 2022, when it went down below that and it traded to the 50-day, which sort of corresponds, I think, to the 100. Okay, and then they got a 200-day moving average, which is down in the 70 range. So this thing can go anywhere. If it went to 140, it wouldn't surprise me. I personally would be a buyer if it went to 100. I'd jump in and buy a lot at 100 because it's probably going to bounce to 120. And I hate to be a trader when I'm trying to be in an income fund, but I hate also seeing people just skate to where the FOMO is right now. Not that it's a bad company, it's going to continue to do well, but I think 5 years from now, Nvidia will not be the big talk of the town. It's going to be the software guys, like a Palantir, okay, like a Snowflake, Snowy. It's going to be the software ontology that actually makes all of this AI hardware do what the companies need it to do to make them better. It's really the applications, right? So if you buy a real fast PC and you got the greatest one in the world, you really care, and you're a gamer, you care about what your GPU is or how it performs with a particular game. It's the same thing with hardware. They get those massive GPUs and all of that capability for AI, but ultimately it's the software that can tie everything together. So, Nvidia may have a 3x in it, okay, but Palantir's probably got a 15x in it over that next same time period. So I like to skate to those that are coming. It's not in YieldMax, but it's coming. So, and I think Snowy is a far number 2 to Palantir on the ontology side of the software. So, sorry, AMZ. What do we got for AMZ? 78 cents, right? That's a tough one. I like AMZ. I'll be buying some AMZ because I'll tell you where their secret sauce is right now. Everybody knows what they do in retail online. But what about the side where, well, and I have friends in this from the industry that were younger than I when I retired, and a lot of them are over at Amazon, but they're in the cloud services. I don't know if you think of Amazon just as a retailer, certainly they are. They've revolutionized that space. But their cloud services are number 1, beating Microsoft with Azure and beating some other big players there. But it's their ad revenue that's going to add the free cash flow, and their margins are going up in the near term. If we get this recessionary data and people cut back on their spending, the ad revenue is going to keep their earnings up. So out of the big 7, I really like where Amazon is going. So I just wanted to give you that input. That I think that adds some value. 78 cents. You guys can see them if you want to skip my talk. Okay, but I left a couple out on purpose because I track them. There's 4 that I track. So Facebook, Meta, I've got it 79 cents. And you can look at the previous, you can see the June column, right? Total just means out of all their payments, what's the total? What's their average? Okay, so Google, GUI, 67 cents. Okay, Netflix, 73. Now look, they've had some dollars and stuff, but their current price is down a little bit on Netflix. So we'll see. I mean, if the recession gets bad, people can cut back on Netflix. It's pretty inexpensive, and the argument would be, well, they're not going to the cinema, they're not going to the mall, so they're staying home and watching Netflix. And there's something to that. I think this will be a good company. All right, let's jump into Coney. I kept it off here, and I'm going to do it live with you in the sense that I type it in, right? So let's go get that sheet for you. And here's my data. So what do we have this month? Well, they've earned $2.63 in total. I think that they're going to pay $2.01. I think they're just going to break the $2 mark, right? To go, wow, that's a good payment. Now, last time they didn't make much, so that worries me, right? So they had 151 and 371, and they paid 169. So this time they got a full 263 here. The negative is positive money. So I think they're going to reach up because people want money from BTC-oriented funds, right? From a crypto exchange like this. So I've got 201, so let me enter that for you guys. Now, by the way, if you want to know, all I've done here is give you a yield based on their price, which is actually what closed at 628. Okay. Even I've already updated all the price, but I was still showing the old one. All right, so we got Coney in there. Disso. Do people care about these? Probably. 40 cents, okay, down because their price is down. MFSO. Okay, MFSO. Microsoft, Azure, and the cloud. Okay, I got 76 cents. This company has done a number of announcements and a number of things. And by the way, guys, if you doubt Nvidia, right, I don't doubt Nvidia. Again, I think it's a great company. But Microsoft said, hey, you can't deliver all of the hardware we need, Nvidia. So we're going to AMD because they got one that's 70, 80% as fast and it's cheaper. We just need to buy more of their units and they can deliver. Because everybody was rushing to the most powerful. right? The most powerful GPU. And Nvidia went from being a consumer giant in the retail, all the gamers wanted Nvidia, you know, personal computers, right? Well, when they moved into the data center, they started really doing well. And they're kind of the giant there. But again, I've seen AMD do a lot of things, advanced micro devices, in terms of competing. They couldn't beat Nvidia at the top at the consumer gaming, but they made mid-tier and close to the top, and they lowered the price. And so they gave fits a little bit to Nvidia. But when you go into the data center and you got the volumes of all these infrastructure build-outs and everything, then Nvidia is killing it. But guess who's going to come after that? AMD. And they're going to eventually erode the margins on Nvidia. So if they got 10, you know, they can charge whatever they want if somebody wants the fastest, you know, commercial GPU in the data center. And that is what's happened. But I just see some pull in their margins over time. They'll still be a great player. They'll still be very dominant in a lot of ways. Just don't think you're looking at a 20x from here. It's just, you know, it's not going to happen. And when I made that comment about Palantir, they're a $50 billion company. And think about NVIDIA's a $3,000 billion company when you say trillion, right? So that's why Palantir has the growth cycle over the next 3 or 4 or 5 years. It could be 10x or 15x, and NVIDIA maybe is 1 or 2x. We'll see, okay? Just personal opinion. I give it to you. Okay, so Microsoft, 76. Zomo, you know, oil's been down. Their stock's down a little. I got a conservative 31. They paid in the 20s and they paid in the 30s. It's even a high range for them. But great oil explorer. They hold back. You know, some of the ESG legislation has really made these guys not invest what they normally would. So JP Morgan, banking, right? Let's see if we get any more crisis in the banking area. You know, I don't own this. I'm not looking to own any banks right now. But for those of you that have, I mean, they're the big dominant name out there. I got 39 cents. Okay, let's move on. AMD, just telling you all the good stuff. They didn't have that great a month, right? And part of the problem is it's all about the big seven, the big six. Now that Tesla's sort of performing, it's, you know, it's the Mag 7, but Tesla was a lagger in there, Tesla. So I see that changing, but I'll tell you what I also see happening. I see the Russell and I see the rest of the S&P. The valuation is like 34% of the entire of the Mag 7 for the S. Actually, 6 companies, 6 of the companies, exclude Tesla, constitute 34.4% of the entire S&P market cap. That's never happened before. You've never had that much wealth in so few of companies. And so what's eventually you revert to the mean. All the other guys people are going to realize they're undervalued. And while that doesn't mean the top guys crash, it just means they don't run up like they have as long as the market stays up and people start moving into the second tiers, right? And clearly that's coming. Let's see how it plays out. So I got 80 cents there, 59 cents for PayPal. PayPal didn't have as great a month as they often do. Squee, again, another payment-based company, the old Block, right? And all of their metrics. This is, what's the average for them? The average is 99, right? So they're under their original launch NAV. I got 74 cents. Murni, who knows in the pharmaceuticals, right? I mean, their big thing was all the stuff they did for COVID. They've got some drugs in the pipeline, but I'll tell you what's changed in pharmaceutical. And all you guys that like the AI stuff, AI has had a profound impact and will have an even greater impact because of drug discovery. They can discover these drugs, they can alter molecules, they can testing, so they can get through these clinical trials at a much faster rate. So that hurts the guys. You can no longer go out to a drug company and just say, okay, they got these 3 coming off the patent line, right? But sometimes they can extend the patent for another 3 or 4 years if they spend enough money. And then you go, but look in their pipeline, they got all this. Well, I'll tell you what, the pipelines for everybody is coming down when they deploy AI. So it's hard to know who's going to hit with a blockbuster drug and outdo somebody that may not be showing it on their pipeline. It used to be, well, if they're not in clinical 3, it's going to be forever. So I find it fascinating there. So I don't own any pharma at the moment, but pharma always performs, and it'll perform even if the recession gets worse. So, and again, so let's move on. AIYY, 56 cents. Okay, so AIYY, you know, the AI is great. But like I said, I see us evolving through the hardware side into the software side. But the software side hasn't performed like the hardware. All you got to do is look at Nvidia. They don't really make software. They make hardware, right? So this will be an up-and-comer. It just, the money isn't flowing there yet in comparison. So Misty, let me pull up my sheet for you, folks. I saved this for you. Misty, Ms. Misty. All right. I've got $1.61, and all my people, all the subscribers and viewers know this. This is a tough one. You know, they got $1.61. And I use this reference item, hit for the cycle, and you know, baseball guys know this, right? A 4-bagger is, you know, you hit a home run. A 3-bagger is you hit a triple. Double is a 2-bagger, and a single is a 1-bag. So, and a lot of the scorekeeping guys use, you know, that kind of stuff. And you look at how rare, there's only been like 300 times that a hitter in the 112 years out of all the games played have hit for the cycle in a game. It's extremely difficult, the triple being the hardest, right? Because you got to have some speed. Basically, you outran a double. So if you're the catcher, you're a big, heavy guy, you'd have to hit it where it ricocheted out the wall, and it'd basically be a home run for your speedster, for your shortstop, or your base stealer. But a big, heavy, strong catcher probably can't, well, he can't make it home, so he gets a triple. But the speedy guys can turn a double into a triple, so it's extremely challenging. So sorry I went baseball on you. You got to have fun with this. So I got $1.61 because now, could YieldMax pay $2? Absolutely. And you know what? The FOMO into Misty would just go nuts, and it might behoove them to do that. But it may say, hey, we can't always do that. So then you set your expectations. Next time you don't make it $2 when it should be $1.50 or $1.40, then you alienate people. I don't know. I'll say this. I got a video coming out. It should be out real soon. And I talk about all the ETFs out there that do dividends and where they rank in terms of ETFs, their assets under management. And YieldMax is doing well. You know, they're 46 now, you know, with like 3.8 billion assets under management. And clearly this is one of their top performers. So we shall see, peoples. All right, so I got $1.60. Oh, excuse me. $1.61. Let me plug that one in. And understand that these are guesstimates, right? I'm not going to be right. I wish I could be 98 or 99%. Maybe I'll hit a few, but it's difficult, you know. You see all kinds. You go out to groups and chat sites, and everybody's got an opinion. So it is what it is. So $1.61, yielding 66.87 at the closing price on Friday. People won't be happy with that. All right, YBIT. Here's another extremely hard one, right? Let me pull up the sheet. Even though I put the price in here, let me pull up the sheet for you. This one is about as strange as it gets. So it's had all this, or sorry, I almost said what GDXY. So last month, they collected $6.66, and they had 5 cents in short call. The problem is they went out $8 or $9. Well, they didn't start out that way. They started out doing the close range. This works off of BIDO, and they did the close range. However, you know, they collected all this money, and I put out and said they're going to pay $250 plus. Well, first off, you got to look at what's the IV. Well, the IV is somewhere, you know, I think high 50s, 60s, but it's definitely right on BIDO, and BIDO is CME, or the futures market, Bitcoin futures. So you can't get much closer to BTC action. Now, they pay a good yield. I own some BIDO, right? So it'll challenge YBIT for its yield, for its payout. Now, it's higher price, so you back off the yield a little bit because it's a $24 and we're $17.01, right? And the fact that we're going back is mainly because of BIDO going back. BIDO doesn't, sometimes it tracks real close to BTC, but you have to really go back and add all the dividend payouts and the price of BIDO. It's sort of like, you know, on total return, you take your capital gain or loss, and then you take all the dividends and you add them together and see how you compare it against the underlying. So when you do that, BTC and BIDO are very close. So I've got 116. I might just lower that, you know, in my sheet, you know, real time. I'm going to go conservative. And again, they may pay 80 cents. They may pay 50 cents. You know, they may go at that yield. What do I have it at? I'm sticking, they paid an 81% yield last month of $1.37 because we were up around 19 now in the NAV price. So this is going to tell me. But by the way, guys, this fund for an early fund is very popular. You know, the assets under management and everything ranks pretty high because there's a lot of love for crypto. Now, ProShares and BIDO and BlackRock and Fidelity, all these funds, everybody and their brothers got some kind of income or fund that's based on Bitcoin. So this is a highly competitive area that YieldMax went into. So let's see what they do. I'm saying $1.16 and we'll see. All right, let's get done. Crash. Crash is going down. You know, that was a guess. I'm saying 77 cents. Why is it going down? The NAV went down, and also Tesla and the underlying Tesla are performing better. So the bear fund, right, the bearish side, the only bearish right now, we'll be getting dips, DIPS for Nvidia, the opposite. So I got 77 cents. So GDXY, again, another tough one for me. Let me find it and drag it over here, peoples. Okay, this is the one I was going to talk about. This will be GDXY's first payment. They had half of May, or I think till May 20th, right, the inception date. They generated $1.07 in total income, 34 cents in short call. Basically, they've been winning their weeklies. GDXY ran up prior to its inception 2 or 3 months and had a nice move, and it's just been flag flying, right, and like a bullish, and here's the flag, right, here's the pole over time. And here's the flag. So these guys are just collecting most of all their income every week. It's not fantastic. If you look at the IV, you're talking about a 30 IV. But because I retired successfully in the decade of the 2000s after the dot-com crash by being in gold, silver, and all of the precious metals, I learned so much in that decade and just worked that to the nth degree and was able to retire by the end of the decade. I had almost an 8x on all of my money. And I did it by just studying what went on and how it shifted from large caps to mid caps to juniors, right? I looked at the Elliott wave side of it. So I really, really became familiar. And guess what? I see us entering into that cycle again. We're in the second inning of a 9-inning game. So this stuff, based on war cycles, based on all the things that are happening geopolitical in the world, and, you know, it's just what's going to happen along with other commodities in this next 8 years. So I've got, look at this, $1.87. Now, YieldMax has a choice. They're not going to go out and pay $1.87. Could they? Yeah, that's what it's earned. It also has a liability, right? They're not selling near as far out. They're selling 38s when we're at 34. But you get the idea. So I see that. I just came down and said, well, I'm going to split it. I'm going to take 94 cents, right, on 1889, and that's what I've got. And let me see if I posted that or I didn't. Oh, I went conservative. I peeled it back to 85. I remember now. Okay, so I think it'll be sub-dollar, but if they go down and they pay 50, 60 cents and they go down to their IV, I think it's foolish because this is already such an undervalued sector in the market and they're having trouble getting people into this fund. It's one of the most hated sectors in the world. But what happens in stock markets is that area that's super undervalued, when people realize it eventually, smart money starts accumulating, and then retail sees some of the movement, and the thing that's going to generate the movement is the Q2 and the Q3 production results and earnings. You know, when your goal has been at all-time highs and all of a sudden you're mining it and it's gone up 30% or 25%, you know, your earnings, you know, tripled. Depends on what your, you know, your cost of operations, which is nothing more than labor and energy, primarily oil, diesel, and labor. And all of a sudden, their earnings double and triple. You start to be a mini Nvidia over time, right? And then you have a crash cycle 8, 10 years later. It's boom and bust in commodities. Always takes place. So that's why I'm so bullish. It'll be real interested in what they pay. They got a decision to make. I think they should pay half, 94 cents. I'm saying 85. If they go down and pay 50 or 60 cents, to me, that's a shame. And they may have trouble getting people in the fund for a while. But there's smart people, too, that see that. Snowy. Problem there is, what did I have? The 11th was the fund inception. Or, sorry, the 10th. I put that in here. So, I don't know. I'd say 85 cents. Or, sorry, 82 cents. The problem there, I think Snowy, it kind of has an ontology, you know, type of software. It's a distant second by far to Palantir, PLT, who's clearly the leader in there. But it's an interesting area that will grow over time. And, you know, the fund's not that far off. Actually, it's up, right? It's 21. So I'll stick with 82. So let me let you guys go. Sorry this thing went so long. Again, just slide through. But I wanted you to wait for at least a couple of them because I spend a lot of time and energy and have a lot of expertise, I think, on what they earned, not necessarily what YieldMax decides to pay. Okay, guys, Bruce out. This is not financial advice, and I'm not a financial advisor. Okay, bye.